Mastering accounting interviews. 15 tough questions and expert answers. Question 1. Can you explain the difference between accrual accounting and cash accounting? Answer. Accrual accounting records revenue and expenses when they are earned or incurred, regardless of when the cash is exchanged. Cash accounting, on the other hand, records transactions only when cash is received or paid. Question 2. What is the purpose of the balance sheet? Answer. The balance sheet provides a snapshot of a company's financial position at a specific point in time, showing its assets, liabilities, and equity. It helps assess solvency and financial health. Question 3. How do you calculate depreciation, and what are the methods of depreciation? Answer. Depreciation is the allocation of the cost of a tangible asset over its useful life. Common methods include straight line, declining balance, and units of production. To calculate, you divide the asset's cost by its useful life. Question 4. Explain the concept of working capital. Answer. Working capital is the difference between a company's current assets, like cash and accounts receivable, and current liabilities, like accounts payable. It measures a company's short-term liquidity and ability to meet its short-term obligations. Question 5. What is the purpose of an income statement, and how does it differ from a cash flow statement? Answer. An income statement shows a company's profitability over a period by detailing revenue and expenses. A cash flow statement, however, tracks the inflow and outflow of cash, providing insights into liquidity and cash management. Question 6. What is the significance of the debt-to-equity ratio? Answer. The debt-to-equity ratio measures a company's financial leverage and risk. It compares total debt to shareholders' equity and helps assess how much of the company's assets are financed by debt. Question 7. Explain the concept of goodwill and how it is treated in accounting. Answer. Goodwill represents the premium a company pays when acquiring another company above its tangible assets' fair value. In accounting, goodwill is initially recorded as an asset but is subject to periodic impairment tests. Question 8. What are some common financial ratios, and how can they be used to analyze a company's performance? Answer. Common financial ratios include the current ratio, short-term liquidity, return on equity, profitability, and debt-to-EBITDA ratio, debt coverage. These ratios help assess a company's financial health and performance. Question 9. Can you explain the difference between an expense and a capital expenditure? Answer. An expense is a cost incurred to generate revenue in the current period and is recorded on the income statement. A capital expenditure, however, is an investment in assets expected to provide benefits over multiple periods and is recorded on the balance sheet. Question 10. How do you handle financial statements when a company undergoes a merger or acquisition? Answer. In a merger or acquisition, financial statements may need to be consolidated to reflect the combined entity's financial position. This involves adjusting and combining the assets, liabilities, and equity of both companies. Question 11. What is the difference between GAAP and IFRS accounting standards, and how do they impact financial reporting? Answer. GAAP, Generally Accepted Accounting Principles, and IFRS, International Financial Reporting Standards, are two sets of accounting standards used globally. GAAP is primarily used in the United States, while IFRS is used in many other countries. The main difference is in their rules and guidelines for financial reporting. For example, GAAP tends to be more rules-based, whereas IFRS is principles-based. Companies operating internationally may need to reconcile their financial statements to comply with these standards. Question 12. Explain the concept of FIFO and LIFO inventory valuation methods. When would a company choose one over the other? Answer. FIFO, first in, first out, and LIFO, last in, first out, are inventory valuation methods. FIFO assumes that the oldest inventory is sold first, while LIFO assumes the newest inventory is sold first. Companies may choose one over the other based on factors like tax implications and the current cost of inventory. FIFO generally results in a lower cost of goods sold and higher reported profits during periods of rising prices, while LIFO may have the opposite effect. Question 13. What are the components of the statement of cash flows, and why is it essential for financial analysis? Answer. The statement of cash flows consists of three main sections: operating activities, investing activities, and financing activities. It's crucial because it provides insights into how a company generates and uses cash. Analysts use it to assess a company's ability to generate future cash flows, its liquidity, and how it manages its operations, investments, and financing. Question 14. How does revenue recognition impact financial statements, and can you explain the principles of the Revenue Recognition Standard, ASC 606? Answer. Revenue recognition determines when and how revenue is recorded on financial statements. ASC 606, the Revenue Recognition Standard, outlines a 5-step process for recognizing revenue: identifying the contract, identifying the performance obligations, determining the transaction price, allocating the price to the performance obligations, and recognizing revenue as the performance obligations are satisfied. This standard aims to provide a more consistent and comprehensive way to recognize revenue across industries. Question 15. What is the difference between financial accounting and managerial accounting, and how do they serve different purposes in an organization? Answer. Financial accounting focuses on preparing financial statements for external stakeholders, such as investors and regulators, to provide a clear picture of a company's financial performance. Managerial accounting, on the other hand, is used for internal decision-making and focuses on providing management with the information needed to plan, control, and make informed decisions about the company's operations and resources. These questions cover various aspects of accounting and should help you prepare for tough interview questions in the field. It's essential to practice your answers and be ready to provide specific examples from your experience when discussing your qualifications. Please ensure to subscribe to my channel and activate the notification bell for future video updates. Feel free to provide feedback in the comments section with your desired topics for future content. Additionally, consider sharing this video with your friends. Thank you for your support.